Question number 4, Phil Twyford.
Thank you, Mr Speaker. My question is for the Minister of Finance. Does he support the Reserve Bank introducing debt-to-income ratio restrictions for mortgage lending? If so, why?
The Honourable Bill English.
Mr Speaker, the Government is presently considering a request from the Reserve Bank to add a debt-to-income tool to the bank's macro-prudential toolbox. No decision has been made yet, but I would point out to the member that in the last few days the Reserve Bank Governor has said that if the tool was available at the moment, he wouldn't be implementing it at the moment.
Supplementary.
Supplementary question, Phil Twyford.
How has he allowed the housing market to deteriorate to the point where a third of new mortgages are now over 6 times the family income?
The Honourable Bill English.
Well, Mr Speaker, the level of those mortgages is a decision made between the borrower and the bank, and they decide between them how much risk they're willing to take. And one of the things that will be driving the borrower's considerations is that interest rates are half what they were when Labor left office. And that is one of the reasons why there is strong demand for housing. Another reason is because those households have confidence in the economy. They can see that their job could yield pay rises consistently over time, and they back themselves to be able to meet the mortgage commitments. And I don't think the government is in a better position to make that decision.
Supplementary.
Supplementary question, Phil Twyford.
Is he concerned that with the average mortgage for a first home buyer now at $390,000, a 1% rise in interest rates would add $4,000 a year to interest payments, crippling many hard-working families?
The Honourable Bill English.
Well, Mr Speaker, the member refers to these hard-working families as if they somehow lack the capacity to understand what they're doing, and I disagree with them. I've spoken to many hard-working families who understand that interest rates could go up. Their banks actually run their tests on the mortgage as if interest rates are 6 or 7%. That is a couple of percent or 1.5% higher than they currently are. So we believe these are mature, sensible people, hard-working people who are making reasonable decisions about what risks they're willing to take. That's against a background of pretty consistent warnings from the Reserve Bank that they shouldn't overstretch themselves, and it appears that banks in particular are listening to that.
Supplementary.
Supplementary question, Phil Twyford.
Is he embarrassed that despite repeatedly telling the House that loan-to-value ratios were the decision of the independent Reserve Bank, the bank has now so publicly asked his permission to add a debt-to-income ratio to the toolkit, preventing a repeat of that deception?
The Honourable Bill English.
Well, Mr Speaker, no, not embarrassed at all.
Supplementary.
Supplementary question, Phil Twyford.
When will he accept that telling first home buyers to be careful and tools like LVRs and debt-to-income ratios that hammer home buyers do not amount to a housing policy, and the only serious solutions are to build more affordable homes, genuinely reform the planning system and crack down on speculators?
The Honourable Bill English.
Well, Mr Speaker, I think, as the member knows, has been discussed extensively in the House. Increasing the supply of housing is the key to having a less exaggerated house price cycle. The biggest step forward in that has been the passage of the Auckland Unitary Plan, because government can't go and build thousands of houses if the council plan doesn't allow it to occur. This new Auckland Unitary Plan does, and I want to acknowledge the members' efforts in helping the council get across the line on what's a radically different plan, and now he can look forward to increases in the supply of housing.